Hi everybody, this is Gary Dean and this is our nightly video report for Monday, January 25th, 2015 for all the people that registered for the webinar. Thank you. You should be receiving these the free video reports and stuff right now. But anyway, let's get started. So we saw some pressure on the bulls today, and it was expected just from the divergences that we were seeing on the short-term charts. And one thing that I had mentioned it was expecting something like this type of movement where we get a big move up, down, up, and then we head back down again. So it's not going to follow it exactly, but it's something that you want to take a look at and pay attention to, because it may be a a fractal pattern that could be playing out. So in this this is back with the August say mini crash, then we had a huge 2 days up. We we got kind of that, but nowhere near the size that we got here. So it's it's going to mimic it. It just may not follow it exactly. But on this, we had a move down in 2 days that brought us between the 62 and the 78% retracement. So this is what we're paying attention to try to get some ideas. And again, it's not we don't want to follow us exactly. We just want to keep an eye on it for some clues, where tomorrow, if we have another down day, this would be the area that we want to keep an eye on, because it's between the 62 and the 78% retracement. So that's between the 1849 and 1833. And then, if that did hold up like that, then we could anticipate that we possibly could see another rally. So again, I'm not saying this is it. We just want to keep an eye on it, because we're very, very oversold on the daily charts, and that's the way we were back in the August time frame. So let's move on. I had said that we had 5 waves down here, so a typical retracement would be anywhere from the 50, 62, and possibly even the 78% retracement. We got the big bounce. We don't have bearish divergences, so what would make sense is we get this little, we get to pull back, say down to one of the levels that I just showed you. And then this is your wave A, this would be your wave B, and then we have another push up that would make a wave C. Again, these, if the bulls can push it through Friday's high 1908 and through the 1915, the next resistance area is up at the 1927, and if they get through that, then we're going to be looking at the 1947. So the first obstacle, let's just say 1915, if they get through it, then we should see a quick move up to the 1925, and if they get through that, then we're looking at the 1947 level. So those are your resistance levels. Now, if we take a look at the 15-minute chart here, I had said, this was the support area. I actually sent out an email saying we're at support, but I'm passing on buying, because we have the bearish divergences in place here. We weren't really extremely oversold, so I wasn't really willing to put in any more on a long position. I'd rather just hold my half at with a stop at even after cashing out half of it on Friday. So we have a 38% retracement at 1872. That is going to be a pivot, and if they lose that, then the 1860 is going to be kind of important, because it's a 50% retracement from this low to this high. It's also a support level here. So if the bulls lose that, then most likely we can see a quick move down to the 1849, 1832, and that's the fractal pattern that I was showing you on the daily chart. So the main thing that we really want to keep an eye on tomorrow, if they open up down, is the 1872, 1860 going to hold? If it doesn't, then just don't bother trying to buy. Wait and see if the 1850 or the 32 comes into play, and buy there. And just that would be your wave A. This would be your wave B, and then the wave C. The expectations, like I said, we could close the gap up at the 1919, or we have the resistance at 1833, and then another resistance up at 1846. Now, one thing that I want to keep, I actually have it on the 5-minute chart here. What I want to show you is we have this open gap here, and that's at 1874. So if they open up down tomorrow, and keep an eye on that gap because that may do it. But we don't have any bullish divergences even on the 5-minute chart. So we're pretty oversold here after being showing bearish divergences and overbought. So we burned off the overbought conditions. We're oversold, but we don't really have buy signals on the short-term charts. So it's it's something that I want to at least see some bullish divergences taking place on the 5-minute chart before I even start to look to possibly add to the long position. And again, I was really more bullish when we were down here than I am, right now I'm just neutral. If we head lower, it's going to make sense. If we head higher, it's going to make sense. So when you have a kind of a neutral stand, you don't want to get really aggressive on the other side. We know that, a lot of shorts got covered on, were forced to cover. Some of them are probably going to be jumping in. So either there's one or two things that are going to play out. They're going to hold support and force the second phase of shorts to come to get them to cover and push it up to one of the resistance zones, or we're going to start pushing lower. And if we start losing some important support levels, the bulls that bought up here are going to start panicking, and you're going to get people piling on the short side. So to sum it up, I would keep a neutral bias, wait and see how these support levels hold. I think 1860 is really, really important. If they lose that, then I wouldn't even consider it alongside until somewhere down here. And if they do hold, then I wouldn't be considering a short side until we at least start closing gaps or hitting these resistance zones. So with that, let's see what plays out tomorrow, and have a great night, and I'll see you guys in the morning.